We can speak to Christopher Wheaton. He's a fund manager at Allianz RCM, and he joins me now from our London studio. Christopher, thank you so much for joining us. All right, I think the bottom line is Robert Dudley going to be the right man for the job?
I think it's pretty clear that he's got a number of challenges to overcome. You know, what I'm looking for from Bob Dudley is, I think, to carry through on the comments he's made this morning of talking about a leaner, more refined, pun intended, BP that's going to be smarter and leaner and better at what it does than it's been in the past.
30 billion in asset sales, that's a huge amount. How are they going to hang on to their profits? Is there a concern that actually they're going to sell these assets too quickly for too cheap?
Well, I think the encouraging thing for shareholders is the price achieved only last week with the deal with Apache, raising $7 billion from those asset sales, or those particular assets in Egypt and in the continental US, was, I think, extremely encouraging. As the lead-in piece said, it's quite clear that the industry values these assets much more highly than the stock market does, and that's one of the peculiar things about the stock market valuation of big oil at the moment, that it doesn't give valuations as anywhere near as high as the industry does. So I've got pretty high confidence that it can achieve $30 billion relatively easily, with maybe no much more than about maybe a 10% or maybe a little bit more cut in the headline production number from the sort of 4 million barrel a day base BP was doing at the end of 2009.
But Christopher, what's actually the rationale in keeping the US operations? Because if they sell off Prudhoe Bay and some assets in Argentina, that comes up to 14 billion. The US is where they have the troubles, is where they have the political pressure. Why not sell those off and concentrate on the rest of the world?
Well, I think it's going to be difficult exiting the US when the US is 40% of global oil demand. I think that's a fundamental issue, that it's a market you've got to be in. Secondly, BP and its heritage with the merger with Amoco going back to 1998, it's pretty clear that BP's had a long history now in the States, and that a lot of its most valuable assets are still in the States. Irrespective of political pressure, I think it's still a market that BP is going to have to remain in for the foreseeable future.
Christopher, a lot of the concern really is about what Tony Hayward is going to get at the end of the day. He's going to get a lot of money after this fiasco. Are we going to have a lot more pressure from the States, and is that going to make it more difficult for BP to get back on its feet?
Personally, I don't think so. The vast majority of this multi-million pound package that Tony Hayward is reported to have got is actually his pension pot, and he's entitled to that with nearly 30 years service with the company. I think that's pretty clear to me, and I think that's a pretty reasonable feeling. Compared to a lot of the payouts elsewhere, say in the United States, this is by no means egregious at all in terms of the actual financial amount, particularly when he's earned over many, many years of hard work, that pension pot that he's entitled to.
Your last feeling, what is the first thing that actually Bob Dudley needs to do to regain market confidence?
Well, I think a lot of those have actually been done already. It's about putting a stable financial situation or financial base under the company. A month ago, the stock market was telling you this company was going bust, or it was going to be back. It was in severe financial distress. It's pretty clear that, given the combination of cash generation, BP generated or paid off another $1 billion of debt in the second quarter, on top of the $1 billion it paid off in the first quarter. A lot of those asset sales are going to be helpful to put a stable financial floor under the company.
Christopher Wheaton, thank you so much for joining us.